Good evening and welcome to 16 by 9. Alan Stanford was among the wealthiest men in the U.S. He built a lavish lifestyle from banking and smooth talk. But his slick sales pitch turned out to be a lie. Stanford ran one of the biggest Ponzi schemes in American history. That is until his house of cards collapsed, costing investors billions. Tonight, Sean O'Shea has the story of a fraudulent empire built with the help of one of Canada's biggest banks.
The spiel was awesome. You know, it was like books of fancy pictures and data and nice office with pictures of children on the walls. It was very, very, very believable. And apparently after the fact, lots of people believed.
Here, the possibilities are endless because potential has no boundaries.
He built a marketing machine and a banking empire that spanned the globe.
The Stanford organization today maintains in excess of $10 billion in deposits, assets under management, or advisement.
That banking empire allowed Alan Stanford to become one of the richest men in the world. He even appeared on TV playing that role.
Is it fun being a billionaire?
Well, yes, I have to say it is fun being a billionaire, but it's hard work,
But as they say, behind every great fortune is a great crime.
It was at night when it came on the evening news. Lewis had already gone to bed, and it said the SEC has shut the Stanford entity, whatever, down.
Today, in the Southern District of Texas, an indictment charging R. Alan Stanford, chairman of the Houston-based Stanford Financial Group.
And I went and woke Lewis up and I said, baby, we may have lost our money with Stanford.
That news meant that much of Kathleen and her husband Lewis's retirement savings, $240,000, were gone overnight. Money that was handed to this man.
The moral to this story is if you're full of BS, it'll get you to the top, but it will never, never, never keep you there. Thank you very much. Thank you.
None of it was true. None of it was true. His was a classic Ponzi scheme.
Yeah, hard-earned money went down the drain because of him.
Southern Louisiana is a place where poverty had, for generations, been a way of life.
Oh, it was very hard. My mom and dad were sharecroppers.
Outside Baton Rouge, here near the Mississippi, people like Kathleen Meir grew up tough.
It was a struggle, absolutely. Came home from school, put the work clothes on, went to the fields, picked up a boiled potato, boiled egg, whatever was Mama had up for us, and she would work in the fields.
Kathleen went to college and became a math teacher. But after 28 years of work, she started to think about retiring.
We didn't have real high expectations about when we retire, we're going to do this, we're going to do that. We just wanted to retire comfortably and not rely on the government or our children.
Kathleen and her husband didn't know much about investing, so she went with an investment advisor from their local bank.
We did our jobs, and we were going to find somebody who could help us. That's what a financial advisor does.
That financial advisor suggested they put their money with Alan Stanford in Stanford Investments.
For the past few years, the bank has enjoyed continued growth in all areas.
We trusted him so much that we thought that was the best place to put it. You know, why not? Why not?
I don't think there's any question but that there will be some criminal charges brought.
Why not became obvious in 2009 when the Stanford Bank collapsed. Kathleen and thousands of others lost their money, and a U.S. judge called Alan Stanford's operation one of the most egregious criminal frauds ever presented to a trial jury in federal court. His arrest meant the end of almost 2 decades of illegal financial activity. But to understand how Stanford got so big, you need to look here in Miami, more than a decade earlier. Miami was his perfect playground, and it soon became the beating heart of his empire.
Drug money built the Miami of the 1980s. Remember the movie Scarface. You remember the pop culture of what Miami represented with Miami Vice, the TV show.
Michael Sala is an investigative reporter at the Miami Herald.
You have the drug business and the drug trade that blew up here in the 1980s.
At the time, it made big headlines.
It's part of more than $22 million seized by U.S. Customs agents right here in Miami, the biggest single cash seizure in U.S. Customs history.
All the cocaine coming into the country, 75% was coming through South Florida.
In Miami today, 2 detectives were arrested on charges of shooting up the home of a drug dealer cooperating with federal authorities.
So Miami became the epicenter, not only of the drug trade, but of where the drug money was coming into.
Miami's cocaine cowboy era had ended by the 1990s, but that city still had lax rules and was an easy place for Alan Stanford to do business.
Going into the 90s, Alan Stanford emerges. Stanford didn't like the American regulatory system. He didn't like regulators. He didn't want regulation. He fought it his entire banking career.
Awash in money, with very loose banking rules, corporations were flocking to the city, and they were cashing in. Miami was the perfect place where shady bankers could do business.
What he wants to do is start selling certificates of deposit. He wants to start making investments and growing.
Certificates of deposit were Stanford's bread and butter. They were like buying a savings bond, and customers thought they were insured. Stanford became a catchphrase for safe.
Absolutely, absolutely wanting something safe. Never ever dreamed that this was not a safe investment because we had a good rapport with our broker.
Stanford promised approximately 3% higher returns than similar investments sold by other banks, a profit that made Alan Stanford certificates of deposit attractive to investors. Stanford said he could promise those higher returns because his bank was run smarter and more efficiently than other banks.
The eagle, proud symbol of Stanford Financial Group.
Stanford spread the message and made slick corporate videos. And to bring that message to investors, Stanford used brokers.
Our employees are the brightest and the most highly trained professionals in the financial services industry.
They really negotiated hard and really wanted me.
Charles Hazlitt was one of the brokers who sold investments for Stanford here in Miami. He tells us how Stanford recruited him to work for the company.
What do you remember about that phone call with him?
Big Texas drawl, very friendly, said kind of the things I wanted to hear, that they were looking to recruit, some outstanding brokers. Used a lot of buzzwords. He's bigger than life. He would say things like, we want to hire someone that's as big as Texas. They can do all, can produce like the size of Texas.
The main reason Stanford can soar so high is our talented staff, of which I am very proud.
Alan Stanford paid his brokers some of the best salaries in the city.
And they're offering a good salary, right?
Correct. Salary plus an incentive, an upfront bonus to move over.
So how much were we talking about?
It was in the hundreds of thousands.
So this was good. This was good money.
Yes, it was.
But with the fat paycheck also came pressure. One of Hazlitt's clients wanted more information about those super safe certificates of deposit. Hazlitt says he confronted his bosses and asked where the money was going.
And they refused to. All they told me was something like it's 20% stocks, 15% bonds, 10% real. But they didn't give me enough. My client wanted more information. My client wanted to see the portfolio, basically. And they claimed it was proprietary.
It was proprietary, that this was some kind of secret sauce mix.
Right.
This was some kind
Which
of
banks here aren't allowed to do that. Banks show their balance sheet.
Hazlitt kept asking questions. Hazlitt says that in the world of Alan Stanford, that made him a problem.
I was ruffling too many feathers. I wasn't a team player. I wasn't a family. It was almost like mafia. I wasn't like a family member. I was questioning the Godfather, if you will.
In that regime, people didn't ask questions.
Nobody asked questions.
It got so bad that Hazlitt eventually quit.
In the next few minutes, I'm going to tell you about the products, the services, and the personal philosophy that make us unique in the financial services industry.
Stanford ended up coming after him for the bonus money he got when he joined. And Hazlitt says he ended up losing hundreds of thousands of dollars in fees and legal costs. In her small town, Kathleen was also feeling the pain caused by Stanford.
Did y'all hear? Did y'all hear what happened to the Stanford stuff? Did y'all hear? And I didn't want to say a word. You know, I was so embarrassed. If I could have gone under the table, I would have.
Next, building a case against the billionaire.
Alan Stanford was one of the top 2 or 3 money laundering targets of the FBI and other law enforcement agencies in the Caribbean.
Still rolling. All right, ready? Hello, everyone. The first half of 2000... I don't like that.
With charm, charisma, and a silver tongue,
hello, everyone. The first half of
Robert Allen Stanford built a massive banking empire. It made him a billionaire.
Can you hear me?
And he treated his employees like family.
I want all of you to enjoy yourself to the fullest this weekend. We have spared no expense, as you can see.
The rules of the family were strict, and according to Hazlitt, employees were not supposed to ask too many questions about where the money was invested.
People say, how in the world has this business of yours grown, Alan? I say, well, simply because we do things differently. Many times we do them the way they used to do them 20 years ago.
But at least one employee, Charles Hazlitt, did start asking questions.
In fact, every time I brought up anything in meetings, everybody was looked at me very shocked.
But do you think people didn't ask questions because the money kept flowing?
Sure, a blind ignorance, right? I think they didn't want to turn the rock over.
To try and get Hazlitt on board, Stanford offered to send him to the bank's Caribbean headquarters in Antigua.
I went to Antigua because Mr. Stanford kept saying, I want you to check out our location there. You'll feel better about selling the CDs. And when I went there, that's really when I got nervous.
His trip to Antigua did not put Hazlitt's concerns to rest. In fact, it was quite the opposite.
It was all very gaudy, very fancy. I didn't see any substance. I talked to the manager of the bank. He didn't seem to know a lot about banking in general.
Antigua is home to Stanford International Bank.
In the early 1990s, years before he set up in Miami, Antigua welcomed Alan Stanford and his money with open arms. He moved there, and soon he and his businesses would dominate the island.
In the early 1990s, Antigua had very lax, if not non-existent, money laundering rules. So you could operate in that venue without fear of being prosecuted locally.
Charles Hazlitt was not the first person to start asking hard questions about Alan Stanford. Years earlier, this man was doing his own investigating. He suspected Stanford was a major money launderer. His name is Ross Gaffney, and he ran the white-collar crime squad in the Miami FBI.
I would say that at the time, Alan Stanford was one of the top 2 or 3 money laundering targets of the FBI and other law enforcement agencies in the Caribbean. We set up a sting operation based on actionable intelligence. We recorded conversations with Stanford in which he very candidly laid out what he charged to launder money, who he paid off. He was very boastful of, that he was a major money laundering bank.
Ross says that drug kingpins were good at hiding their tracks. Also, the Miami FBI couldn't conduct extensive and long-term covert ops in Antigua. Tough U.S. rules prevented them from doing so. So, despite some undercover work, the FBI could not make the case against Stanford stick.
Mr. Prime Minister, members of government.
As Stanford's influence on the island grew, rumors of money laundering would persist for years.
He paid over $200,000 to the lead top regulator in Antigua to look the other way and allow him to essentially keep his operation flourishing, keep it from being disclosed.
In 1999, the U.S. government was so fed up with Antigua and Stanford's relationship, the U.S. Department of the Treasury issued a rare warning, only the second of its kind in history. The American government said that Antigua's anti-money laundering laws were weakened because the regulator there includes representatives of the very institutions the authority is supposed to regulate.
What happened was he basically took over the regulation of his own bank in Antigua. He was able to put himself on the board of the regulators that oversaw his bank.
Antigua had become a major money laundering nation, and Stanford, who was now the most powerful man on the island, had become a problem.
And our U.S. government reacted by issuing this extraordinary warning and spelling it out, and they didn't mention him by name.
One State Department wire obtained by 16 by 9 said that the Antiguan government has effectively ceded oversight of its offshore sector to an offshore banker and his minions. None of this stopped Stanford or even slowed him down.
Stanford Group Company, brokerage firm with branch offices in Miami, Denver, Baton Rouge, Dallas-Fort Worth, and Bonita Springs.
Staying one step ahead of the law, Alan Stanford just kept growing his business, expanding in the U.S. and elsewhere.
As you have seen, the Stanford Financial Group offers a full array of financial services in many markets throughout the globe.
Alan Stanford's big focus in the U.S. became those certificates of deposit, CDs.
He just looted the banks.
Lincoln Kaler is a Toronto lawyer who's looked into Stanford's operation. He says many of those Stanford certificates of deposit were worthless to many people.
So what he did was he went out and sold certificates of deposit to investors. They bought them. He would pay them interest, and he paid the interest from the new investors.
Banks are supposed to take certificate of deposit money and put it in safe investments, getting a small return, which they then use to pay their investors.
Providing investors with a solid return on their investment.
Stanford didn't do that. He used new investors' money to pay the interest to the old investors. In other words, a classic Ponzi scheme.
So a classic, no real underlying investment that's making money. And what he did in the meantime was take money out of the bank and spend it on his lifestyle.
I just knew something wasn't right. They couldn't generate a return on portfolio to pay those kind of CD rates without something being wrong, you know.
Something was wrong, and the fraud was much bigger than he ever realized.
The Stanford International Bank Ponzi scheme is the second biggest in the world ever. The core capital loss to the investors is $5.5 billion.
To keep the scheme alive, those billions needed to move from Stanford's clients in the U.S. and South America to accounts controlled by Alan Stanford. To do that, he needed a big bank, one that would give his operation credibility. For that, Stanford used the same bank 12 million customers across Canada use.
But in terms of scope, the TD was by far the biggest, right?
The majority of the money went through TD.
Next, how a Canadian bank backed a billionaire fraudster.
The very fact that they are taking him on as a correspondent bank, they're vouching for his legitimacy. So around 1990, he opened a correspondent banking relationship with Toronto Dominion Bank here in Toronto.
Alan Stanford started his 18-year relationship with the Toronto Dominion Bank while he was a small banker in Antigua.
Humble beginnings, but we have created a world-class financial services organization with global reach.
That relationship continued as Stanford's business exploded. Lincoln Kaler is a Canadian lawyer whose firm is suing TD for facilitating Stanford's Ponzi scheme.
Without external banks that have access to the U.S. market, the U.S. financial system, he couldn't have done what he did.
Stanford needed to hook up with a bank so he could easily transfer his billions to accounts he controlled. What he really wanted, according to Link Kaler, was a North American bank so he could do business in U.S. dollars. So Stanford needed banks that would play ball.
Based on our investigation, a number of U.S. banks either refused to bank Alan Stanford or quickly stopped banking him.
But TD said yes to Alan Stanford and banked him for nearly 2 decades. And according to Ross Gaffney, for Stanford, having that correspondent banking relationship with TD was a big advantage.
The very fact that they are taking him on as a correspondent bank, they're vouching for his legitimacy with other financial institutions.
Gaffney says that legitimacy that TD provided Stanford was important as Stanford grew his business.
He could go back and say to the people in the Caribbean or to people in South America, my relationship was with, one of the top 5 banks in Canada.
Canada was also known internationally as a safe harbor, a place where banking was more conservative and less risky. For TD, being a Canadian correspondent bank and moving money for another bank also came with responsibilities. TD officials were required to do their homework. TD bankers took due diligence trips and met with Stanford's people. Their job was to make sure his operation was above board. While Stanford was looting his own bank, Kaler says TD was doing next to nothing.
Based on what we've found out so far, the content of the presentations that we found given to the TD bankers were very superficial. We know other bankers who asked the tough questions, didn't get the answers, and stopped banking them.
According to internal documents obtained by 16 by 9, there was also socializing done between TD and Stanford officials. One TD official participated in PGA Golf Pro-Am tournaments sponsored by Stanford. And Stanford staff and TD bankers ate at a fancy restaurant together. According to Link Kaler, while TD had relationships with hundreds of banks, including some of the biggest in the U.S. and worldwide, amazingly, Stanford overtook all of them, becoming TD's biggest correspondent banking customer.
The correspondent banking relationship, as we understand from our investigation, became their biggest correspondent banking relationship, which seems odd given that it's a relatively small bank in Antigua.
We're not just talking about a little bit of money here. How much money was flowing through TD Bank and Stanford in the last year?
In the approximate last 12 months, almost $3 billion went through the correspondent account.
$3 billion through TD Bank?
Correct.
In 1 year?
Correct.
And Kaler says all that Stanford money going through Toronto-Dominion Bank meant more corporate banking revenues for TD. According to TD's annual reports, those revenues increased by $71 million from 2005 to 2007. A 22% increase in revenue that Kaler says was due in part to an increase in correspondent banking with Stanford. For Stanford, all that cash coming in via the Toronto-Dominion Bank meant he could have a very big lifestyle, according to Kaler.
Well, he's the biggest guy on the island. He's got at least 4 private jets that he used to fly all around the world, at least 2 huge yachts. He's got homes all over the world, and he's taking extravagant holidays. He's got the helicopter that says Stanford on it. So, yeah, he's living large. He's the king of the hill.
For that king of the hill, reputation was everything. A reputation that he carefully managed as the fraud grew bigger.
We need many more investors with this type of long-term commitment, willing to work, and having a government, many times just as important, if not more, willing to work with the investor.
Stanford was the legitimate banker. He also played the role of great philanthropist.
Stanford companies and people around the world support more than 100 non-profit organizations.
And patron of sport.
One of the monumental undertakings in the history of world cricket, the Stanford 2020 tournament.
But in 2009, the game was up for Robert Allen Stanford, and his arrest made headlines.
He is being charged by the Securities and Exchange Commission with committing fraud.
United States federal officials moved in and shut down his offices in February of that year.
The Securities and Exchange Commission alleges Stanford is running a fraud scheme.
They also seized his passport. Allen Stanford was charged with 14 counts. At the time, he denied those allegations to an ABC News reporter.
I will die and go to hell if it's a Ponzi scheme. It's no Ponzi scheme.
The other allegation is that you were involved with the Mexican drug cartel.
Oh, bull. If you say it to my face again, I will punch you in the mouth.
You're going to punch me in the mouth?
No, I'm not going to punch you in the mouth, but I'm just saying that is absolutely an absolutely ludicrous thing to say.
Despite denials, in 2012, Allen Stanford would be convicted on 13 of 14 counts, which included fraud and obstruction of a Securities and Exchange Commission investigation. A conviction that led to an astonishing 110-year sentence in a U.S. federal penitentiary. The appeals court would later say that Stanford sat atop a massive Ponzi scheme, and that by 2008, Stanford built approximately $1 million per day from investors to finance his personal endeavors.
I'm proud of everything I've done. I've never involved myself in anything wrong or illegal or unethical.
We wanted to know why, for almost 2 decades, the Toronto-Dominion Bank did business with Alan Stanford, one of the biggest fraudsters in North American history. We asked TD for an on-camera interview, and they told us it is TD policy to not comment on matters before the courts. In the past, TD said they had no knowledge of Stanford's fraudulent or illegal activities, and they were neither reckless or willfully blind as Stanford's correspondent bankers. As for Alan Stanford, he wrote to us saying, without exception, everyone in the media has lied to him and swallowed hook, line, and sinker the government propaganda. With rumors of money laundering, red flags about Antigua, the payment of bribes, and persistent questions about Stanford's credibility, Kaler says TD should have been a lot more careful.
There's a level of due diligence they're supposed to keep doing over the time of the relationship. And it's our client's position that they fell below that standard when they dealt with Alan Stanford and his bank.
Kathleen Meir has moved on from losing so much of her retirement. She's still angry at Alan Stanford and his lies.
Shame on you. That's what I tell him. Shame on you. Poor people, you know, who trusted. Shame, shame, shame for the lives you've ruined.